Hello, ladies and gentlemen. Welcome to the Crypto Jungle, your source for no-nonsense crypto fundamental analysis and technical analysis. If you're new here, I want to invite you to subscribe. We're not your typical YouTube show. I'm not your typical YouTuber. I'm not going to pet your head and call you a genius for buying a dumb shit coin. I'm going to read the charts to you in plain English and kind of give you my interpretation of where I think we are in the market cycle. Without any further ado, let's go ahead and dive right into it because things are looking actually kind of decent. So I'm going to give you my take on things. Macro still, well, let's just not look at my head here and let's just get into the charts here. So we've been watching this consolidation. We got a few fake outs here. We were mapping this out as redistribution schematic number 4. So if you guys are new to the channel, what we do here is we do Wyckoff analysis. If you go and pop into the free side of the Discord server, free side has a ton of information, graphics and just a bunch of stuff that I've curated that's helped me learn this technique. And one of them is this just schematics, these kind of blueprints for price structure here. And we were looking at redistribution schematic number 4, where we had a large shakeout, a trading range form above the shakeout, and then the subsequent breakdown. And that has finally confirmed. We have finally gotten this large shakeout. Now, I've been through, I guess this is my 4th market cycle. No, this is my 3rd market cycle where there have been capitulatory events, a capitulation event. This one, it didn't really feel like a capitulation. Capitulation is usually very, very violent, very extreme, very fast price movements. It's basically just all of a sudden out of nowhere, we go straight fucking down, just straight down. And we didn't get that. Now, that can be attributed to the fact that we've just been on a grind the whole way down since the all-time high. If we take a look at the macro picture, this whole way down on the since this all-time high, it's been a relentless grind. So maybe we don't need that actual final capitulation where it's really, really violent and very fast, aggressive moves to the downside, at least in the short term. So what I'm looking at this now, this Wyckoff schematic 4 has played out, and now we're trying to determine, can we get a bounce? Now, when we go back to the higher time frames, asking that question, can we get a bounce, is kind of shit, because basically since the all-time high, we have not gotten a bounce. We have not gotten a single bounce. If I take a look at this bounce right here, which was just an up thrust out of a consolidation, sure, it was about a 44% move, but in the previous cycle, you got a 100% move bounce. You got another basically 50% move bounce, another 50% move bounce. So there was like significant movements in the previous cycle of that 2018 kind of consolidation before final capitulation. Here, we haven't gotten it. Now, if we take a look at the volume, I am liking what I'm seeing on the volume. Let's go back over to the perpetuals chart. And we'll go on to the 3-day. At least I was liking the volume. Where'd the volume go? There was a volume spike. Is that gone now? That's strange. Go to the daily here on the index chart. Okay, so the index chart has a lot of volume. So the index chart, for those who are unaware, is the aggregated price and volume across many exchanges. And you can see really, really good volume candle here. What does that represent? It doesn't just represent supply emerging. It represents buyers stepping in. And we've also come down and touched and closed on top of the 200-week moving average. This is kind of a macro support range for Bitcoin. If we actually go back onto the weekly and turn on alphanumerics, we'll get to this green diamond in just a sec. But basically, we come down, we touch the 200, we close, and we can rally. We come down, we touch the 200, we close, and we can rally. So we've come down to the 200. We are not closed yet on the weekly candle. So I am waiting for a weekly candle close to confirm this. But, you know, we are seeing some similarities to the previous cycle. The previous cycle did have a blow off top, so structurally speaking, we're very different. It also had a very large rally, very large run up, and a blow off that resulted in that blow off top. But ultimately, we came down into a capitulation that rested on the 200, printing a green diamond on the weekly, and then we had a rally, test, and continuation, getting above the EMAs and going on to a rather significant alt run. If you were not around in crypto in 2019, this rally was significant. This was a very significant rally. Altcoins were doing fantastic. You could make, if you knew what you were doing and you made mistakes in the bull market, you were able to recoup a lot of your losses in this rally, in this condition. So now we're kind of sitting in the same sort of place. We've had our not blow off top, but we've had our market cycle top. We've come down into a capitulatory candle, even though it's not really what I've seen in the past in terms of speed, but you know, we can attribute that to the grind down. And we're sitting on a green diamond, sitting on the 200 week. So what I want to see is I want to see us close. I want to see us close here. We got to close on top of the 200 week, and we have to close with that green diamond intact. If we can close with that green diamond and close on the 200 week, I think that there is at least the bullish case for a bounce. So that is kind of my short-term analysis here. And the bounce can be significant. The bounce can be significant. We're not going to front run any sort of bullish idea. For those wondering what I'm doing with my portfolio, I've been sitting in cash for the most part and taking the odd short-term, short time parameter trade with stops. You know, ETH flashed a green diamond, stepping into ETH. I do have much lower targets for ETH, but you have to kind of play the swings as they present themselves. So there's definitely a potential for a bounce here in the short to medium term. If we get that weekly close on Bitcoin, we'll be stepping into Bitcoin. We'll be taking that weekly green diamond signal. The green diamond does not represent a bottom. Okay, and this is directed mostly to those who are in the private group. A lot of questions going around with the green diamond. We're presented with a green diamond and people are stalling to buy. There's no rush. We need to go back to the basics here. Like if you go, here's the green diamond here. We did not rally for, we did not rally for 18 weeks after that printed, okay? There's no rush. Let the candle close. Let the signal confirm, okay? Start to scale in if you so choose to. But what the green diamond represents is it represents you being at the point in the market where statistically speaking, you have the most upside risk advantage. No indicator is perfect. No indicator is going to nail the bottom. That doesn't exist. And when it does exist, it will cease to exist because people will counter trade it. That's just markets. That's how it works. But we are close. If you were buying Bitcoin up here, and you're not buying Bitcoin here, you're not DCAing right. You're not dollar cost averaging correctly. We have, statistically speaking, the most advantageous point in the market here. Doesn't mean we can't go down further. There are cases where there's a variance of about 20% on this indicator flash. So you need to realize, like, you know, if you waited for the close on this candle, you would have gotten in here, and then it would have come down another 23%. So there's variables, there's variance here. It doesn't mean that we've reached a bottom. It just means that we're really oversold. And typically speaking, statistically speaking, and market cycle speaking, you're at an advantage when you're at that point. So if you are new to this market and you bought the all-time high, and then we came down and you bought the dip halfway down on this retracement, you're already in a DCA strategy. We're actually at that point now where it makes sense for you to DCA. It makes sense for you to buy and add to those positions. Obviously not financial advice. I'm not a financial advisor. Dude wearing a fucking tank top in Thailand streaming to you on the internet. But yeah. Do with that information as you will. Now, let's get into what we're seeing first. We'll do the bad news, then we'll do the good news, okay? We've got glimmers of hope here on Bitcoin. I want to take a look at the bad news, then I want to take a look at the good news, okay? So stay with me here. First and foremost, the dollar. The dollar continues to rally. We have just printed a new all-time high, well, not all-time high, a new local high in this multi-year consolidation. So the dollar is doing very well compared to other fiat currencies. There's a lot of worry about recession and potential depression. I share that same worry as well, so I don't want to come across as though I'm ignoring the fundamentals of what's going on in our debt-based monetary system. But there's this weird narrative going around saying that you can't hold cash because it's being inflated so much. And I just want to say that that's kind of dumb herd bullshit. It's bullshit, okay? Cash is a safe position. Cash is a safe haven. Gold isn't a safe haven. Bitcoin is certainly not a safe haven. Cash is a safe haven. Why? Because everything else falls faster and further than the dollar. Yes, CPI information just came out and inflation is at 8.9% or whatever it is. 8 points, well, I don't even remember, but it's at 8 point something percent per year, which means that the purchasing power of those dollars is decreasing by 10% a year, give or take. So yes, the dollar is losing purchasing power, but it's losing purchasing power at a slower rate than anything else. Therefore, it is a hedge. It is a safe haven. Not the best. It's pretty shit, honestly. And that's where the narrative comes from. But when you look objectively to any chart, any market, it does a hell of a lot better than anything else. So get that kind of, get that herd mindset, that herd narrative out of your vocabulary and understand that, the dollar is a fine place to put your money as it stands right now. Stonks haven't even capitulated yet. Also, the CME gap at 1900 or 19K rather. Yeah, so the stocks have not capitulated yet, but we're kind of at an area of the bounce. So perfect segue into traditional finance. We'll take a look at the S&P. S&P has been trading inside of this up-only channel for a while. Now, typically speaking, during this multi-year channel, we get bounces in two locations. Okay, we get two areas of a bounce. We get bounces off of the mean of the channel, and then we get capitulation bounces off of the bottom of the channel. So most of the market is bearish. Most of the herd is calling for lower levels. In typical composite operator fashion, it's not a bad idea to counter trade the sentiment. There's lots of fundamental drivers as to why this can continue, but a lot of the bearishness is priced into the market. Most of the herd is calling for lower levels, and the herd is always wrong. The herd is always wrong. So, we're at the area of a bounce. We're at that mean. We're in the mean of the channel. We got a little bit more room to the downside. Like I said, Bitcoin can go down a little bit further. ETH can go down a little bit further. I'm just saying that we're close to a bounce potential. And the S&P is no different. We're close to a bounce potential. So watch out for this area. Watch this area. This is on the monthly chart, but watch how we behave here at the month close for the S&P, because we could bounce off of this level. It doesn't mean that I think we can't capitulate. It just means that I think we could bounce because there's been a lot of selling. Everything's oversold. It's very hard to stack up short orders. It's very hard to continue to sell into these environments from a trader's and analyst point of view, which is a decent chunk of the market. The fundamentals will ultimately result in a rather bearish outcome, in my opinion. I think that we're certainly not out of the woods yet, and my macro view of the global markets is incredibly bearish. So let me be clear here. It is incredibly bearish on the macro view, mostly due to the fact that if we look at the Nasdaq, turn logarithmic off. We've basically been on a hyperwave cycle. Now, a hyperwave is categorized by multiple phases in the market, okay? The first phase starts after a large capitulation. This was basically, you know, the dot-com bubble, okay? Back here, this was the dot-com bubble. Then you're going to have these different angles of an uptrend where the angle of attack increases at every phase, okay? So I'll show you those. But is the only reason we're going down? We're going down because people made money. Markets are cyclical. When people make money and there's no money to be made, they sell. And retail always gets caught in the crosshairs of that. So here's phase one. Phase one of the Nasdaq. You can see that kind of low angle of attack. It's about, I don't know, a 20 to 30 degree angle. Then we have phase two. Phase two is about a 45 degree angle. These all kind of end in a volatility event. So phase two, kind of a 45 degree angle. Then we go into phase three, which is a very steep and volatile angle. This is the characteristic of a hyperwave. And then you go into a blow off top. Now, Bitcoin did this exact same thing in 2017. Bitcoin did a hyperwave in 2017. It didn't do it in 2020, 2021. But you can see the different phases here. Phase one, phase two, phase three, phase four. After the blow off top of a hyperwave, and we're looking at the Nasdaq here, after the blow off top of a hyperwave, you're going to get about an 80 to 90% correction, typically speaking. So my macro view of equities is incredibly bearish, You know, I'm being nice here, going down to 71, because, you know, to be quite frank, when I say that the Nasdaq's going to go down 70%, I'm pretty much just sloughed off as, you know, noise. So, you know, this is my opinion. This is based off of the work of Tyler Jenks and his hyperwave theory. We've seen many hyperwaves throughout markets globally, and typically at the conclusion of a hyperwave, you will get that 70 to 90% correction, which would be devastating in the markets. So we basically just kind of topped out on our next dot-com boom. You know, the crypto is kind of at that dot-com bubble stage. We've concluded the crypto bubble. And I think it's going to be driven, the collapse is going to be driven by the equity markets. After phase four, there's phase 5 and 6. So phase 5 is the shakeout, which is what we've just experienced. Okay, we've just experienced the shakeout. Let me clean this up a little bit. Just experienced phase 5, which is this large shakeout here, which we're still working on printing. But then after that, we have phase 6, which is a recovery rally. It's a recovery rally. So we have the potential to rally up to some level that could, you know, maybe we don't go that high. Maybe we go up here. Maybe we do a double top. But if we're following the phases of the hyperwave theory, we have bounce potential here, and that's what we're seeing in cryptocurrency. That's what we're seeing in the S&P. That's what we're seeing here potentially in the Nasdaq. Well, there's not really much showing you other than just my theory of the hyperwave on the Nasdaq. But when we look at the Dow is at the mean of the channel. The S&P is at the mean of the channel. There's a lot of stuff that we can look at that's painting the picture of a potential bounce. If we get a potential bounce, I think that that's going to be it. I think that that's going to be it. And you better be emotionally prepared and just be prepared for that, because this is a very big deal. This Nasdaq blow off top here, this represents the conclusion of a bubble, basically back here, you know. And if we do a retracement on the previous dot-com bubble, don't tell me this shit doesn't happen, because it's happened and it will happen again. The bottom of that was 83% retracement. It's happened before. It can happen again. Nothing's changed. We play with funny money. Eventually, we have an unwinding. We have a deleveraging event in the markets. It's too easy for people to make money. And there's plenty of hallmarks that you can see anecdotally that would allude to this. The amount of fucking financial gurus out there, the amount of influencer money from like social media, people getting paid millions of dollars to shill shit on social media. The interest rates have been very, very low for a very long time. There's a lot of funny money in the system. When you run a fractional reserve banking system, you create a lot of fake money. And then every once in a while, you have a deleveraging event that removes all of that fake money from the system and you get a recession. This is how it's programmed. This is how the system is made. We have a boom and bust system. We've had a boom. It's time for bust. But I'm still calling for a bounce potential in Bitcoin. Now, this bounce potential could be surprising. The most bullish case scenario, I want to talk about a lot of different scenarios because I don't want people to be caught off guard. But this is a crazy scenario that's really going to fuck with people's emotions if you're not ready for it. And I'm honestly going to sound nuts by saying this, but I just want to tell you that there is a potential that we print a new all-time high. There is a potential. Now, we are getting way ahead of ourselves. Way ahead of ourselves here. Okay? We're getting way ahead of ourselves. But there is a potential that we rally back to an all-time high. And that will crush people. This is why I think it's appropriate. It will crush people because we will get to a new all-time high. The bull market will be back on. And then we go down to 10K. Then we go down to the 10K mark. We find support and we trade there for 10 fucking years. If the bubble pops, what is the context of this? The context would be, you know, a double top in the Nasdaq, or at least a rally up close to a double top in the Nasdaq. If we go back up anywhere in this general range in the Nasdaq, okay, if we go anywhere up in this general range of the Nasdaq, I would not be surprised to see Bitcoin put in a high over 70,000, but below 100,000. This is not Moonboy talk. This is not Moonboy talk. This is a potential outcome that I still think will result in a very, very, very large retracement. And I anticipate that if we do follow the kind of hyperwave theory that we're talking about in the Nasdaq, you're not going to have a 2-year bear market. You're going to have a 10-year bear market. There's a silver lining to that as well. Okay. There's a silver lining to that as well. So there's 2 silver linings. First of all, I'm calling a potential full recovery back up to an all-time high. It's certainly very unlikely at this point. So don't quote me saying, hey, you said we're going to do an all-time high. No, I'm saying it's a potential. If the Nasdaq goes back up to this general range, then that's a potential for crypto. But ultimately, this is what I'm expecting. I'm expecting an 85, a 70 to 90% retracement, and then a very long accumulation in excess of potentially 10 years before you get to a new all-time high in Bitcoin. So we can retrace down below $10,000 Bitcoin, and we'll stay there. We will stay there. Crypto will be so fucking dead. You will have zero incentive to be in crypto in those conditions. And the silver lining to that is when you follow the Wyckoff method. Let's actually go and take a look. Another free resource in the Wyckoff server here. The law of cause and effect. Okay. This goes back to how the cycle works. You have accumulation zones and distribution zones. In between, you have the bull markets and the bear markets. Okay. The accumulation is the cause that builds the markup, which is the effect. The longer an asset trades sideways in an accumulation, the higher the markup event. So, if you are the type to entertain the idea of a super cycle, but you're not the person who would entertain a 10-year bear market, you're missing part of the equation. I think that if we are to get a super cycle in crypto, it's going to be in the context of a 10-year bear market. Maybe not 10 years because technology is moving faster, but behind the charts is humans, and humans are more or less predictable in terms of their behavior in a debt-based system. I think that if we do trade sideways for multiple cycles where we don't make an all-time high for fucking damn near a decade, we will have built enough of an accumulation cause to bring Bitcoin to over $2 million a coin. Man, I'm saying a lot of really crazy shit today. But this is how I feel. So let's go back to the short term. That's my macro. My macro is all over the map. It's all over the map. But let's go back to the short term. Short term, Bitcoin dominance. Bitcoin dominance is looking fantastic. We just had our breakdown. We finally confirmed our bearish divergence here in Bitcoin dominance. We've had a breakdown in structure here. If we can begin to trend down, we're going to see positive price action head towards the altcoins. So this is a good thing. This is what you want to see in the short term. We're getting that bounce potential. We're adding to that bounce potential narrative where we can see a rally off of these lows. We're at a very significant area that a lot of people have been eyeing up. And, there's many things to point to in the markets, both traditional and crypto, that could say that we have a bounce potential. Love the crazy stuff. Well, that's good. I'm a crazy motherfucker. So this translates well into what we're seeing with altcoins. We've had devastating retracements. ETH, to be fair, is kind of in no man's land right now. It really is in no man's land. So I want to see this one kind of close. I want to see it close above this level. Because if we don't close a candle above this level right here, which is right at about 1421 on the FTX chart, I want to see us close above this. If we can close above this and then get a higher price than the weekly exponential, then we're building the cause, leaning into that whole narrative that, we have many things to point to for a potential short-term bounce. So that's what I would like to see in Ethereum, because as it stands right now, if we close below it, we're going much lower. So if this weekly candle, a lot of price action is going to be decided this week. We're going to get either the answers for continued downside, or we're going to get the answers for potential bounce at the end of this weekly candle. So there's 6 days left in the candle. If we do close below it, I would expect Ethereum to at least come down and test the area of the breakout here at around just under $700. So 600, 650 with potential wicks down to even $400. Lots of craziness today. Let's take a look at Avalanche. I don't know. I mean, we're below this area here. It's kind of, we got to go to a weekly chart for this one. A lot of stuff on the weekly. Also, we're getting a lot of green flashes. So we got a green diamond on the weekly on Avalanche. We got a green diamond on the weekly on Ethereum. If you guys are interested in this indicator, well, I can't link it to you right now because I'm live, but go ahead and check my previous videos. You'll see green diamond video, know when to buy crypto. And if you take a look at that, it'll explain a little bit more about the alphanumerics indicator. It's the momentum indicator that we use in the private group. You can have access to this indicator, lifetime subscription, links below if you are interested in getting your hands on this indicator. It's a momentum based indicator. We use the Wyckoff method and price structure, and then once we're in a trend, structure is a little hard to trade, so it's better to use a momentum indicator, but we're signaling a lot of really oversold conditions here. A lot of very oversold conditions. A lot of people in the chat today, which is fantastic to see. So if you're new here, I want to invite you to follow or subscribe, and drop some comments down below. Where are you guys from? It's funny how much of a spectrum there is with market participation on these live streams, depending on what's going on in the markets. We could take a look at GNT. I don't know, it's just kind of ticking down. The more you print these things, the more it'll go down. Optimism, devastated. Solana is another one that I'm interested in looking at. It's very close to the structure in Avalanche. We're getting a green diamond. We got some green diamonds on the daily. We got to get them on the weekly. Not quite in green diamond territory on the weekly here on Solana. So probably a little bit more downside to go. It'll be a laggard. Let's take a look at Bitcoin bingo list. Then we'll take a look at some NFTs. And that's about it. Cardano below the 200 week. Let's turn on alphanumerics. No signal on the weekly yet. So, you know, we're looking at positivity in the high cap coins. And if we get follow through in the high caps, that'll translate into the mid caps and then the low caps. Taking a look at from Melbourne, but currently in Miami. How's it going, Johnny? I love Miami. You know what shocked me about Miami? So it's actually a funny story. I went to Miami for the first time early last year. I don't remember the timing, but I went there for the first time, and it was after my wife and I had left Mexico. We've been in Mexico for like 5 or 6 months. And then we were just like, oh, finally, we can get a break. You know, like we don't have to speak Spanish all the time. We can just go into a shop and just speak English. It'll be nice to be in North America for a while. I know Mexico's part of North America. It'll be nice to be in America for a while so we can speak English. Guys, you go to Miami, nobody speaks English. I mean, they do, but it's not the first language. Everywhere you go. Buenos dias. What? We just left Mexico. We wanted a break. We didn't want to speak Spanish more. CRO getting close to flashing. Doge is flashing a green diamond. So again, these higher cap legacy coins are doing better than the more speculative this cycle coins. The previous cycle coins are getting these signals, which is good. Shiba, exactly. It's a picture perfect example of that. Doge is an OG. It's getting a buy signal. Shiba is not an OG. It is not getting a buy signal. Solana, not an OG, not getting a signal. Data, not getting a signal. VeChain, VeChain's an OG, not getting a signal. XRP, OG getting a signal. Zilliqa, not getting a signal. Cardano's an OG, but it's not getting a signal. Cardano, I've been shitting on Cardano for a very long time, and I've been starting to warm up to it. Why? Because it actually does shit now. The whole run up, it was overvalued, speculative vaporware. And now it has NFTs, it has smart contracts, it has DEXs, and it has more of a reason for me to be interested in it. I don't think we've reached a floor here for Cardano, but I do think that I'll be taking a rather, you know, interested position in the next cycle when the time comes. Even the Spanish is different. Yeah, the Spanish is different in Miami. That Cuban Spanish. Miami is wild, trying to work out if I want to stay. It's one of the few places in the US that I would want to stay. I lived in LA for about 4 years. LA was cool until it wasn't. I mean, it's cool still, but it's very, very difficult to live there. They do not make it easy to live there. It's extremely expensive. There's very little infrastructure for getting yourself around that city. I just think there's better places in America, and Miami would be one of those places that I would be looking at. All right, let's take a look at some NFTs. Actually, let's do some on-chain stuff first. I want to take a look at some market top and bottom signals here on Glassnode. So some market bottom and top. So we have the entity adjusted dormancy flow. This kind of measures the time that coins are kind of not moving, and it kind of measures modeling, I guess. I'm not an on-chain expert here, but what I can tell is when there's a green box, that's good. And we have been in this green box. Every time we go into this green box, there's been a rally, green box, rally, green box, rally. And we're approaching the green box. I don't need to know what it does. I just need to look at the metrics. There's other ones that I do understand. The MVRVZ score. They really take a lot of this stuff for granted. On-chain requires a lot of study, and it's very different, and it doesn't really apply in a bull market from what we've seen. But we're getting close to the green box. We're in the oversold conditions. We're approaching the oversold condition if we're not already there. Oh, it looks like it's cutting it off. We might already be there. Want me to pay? They keep adjusting. I used to have way more on my tier 2 model. Oh, these are tier 2. Maybe that my subscription's subscribed. If my subscription is expired, then there's no point in us looking at that. I'll have to renew. Let's take a look at the Bored Ape Yacht Club. So currently sitting at 74.5 ETH, about a 50% retracement off of the highs. What was the all-time high here in ETH? Yeah, 150. So, you know, we're approaching that kind of, we're at that 50% retracement. Now, the thing to watch out for Bored Ape Yacht Club, this is a fantastic barometer for NFT market health, by the way. If Bored Ape Yacht Club is rallying, if CryptoPunks are rallying, NFTs are a good place to be. If they're not, NFTs are not a good place to be. And if you've been dabbling with NFTs and not purchasing blue chips, you've experienced that. That, you know, nothing works. The area to look out for is about 68 ETH. If we break below 68 ETH, that's going to confirm a pretty macro downtrend in the Bored Ape Yacht Club. And that would be a net negative for the NFT market as a whole. So if we break below 68, there's a potential that we really accelerate the downside because NFTs are very, very, very illiquid. It's very hard to find a buyer when you need one if you're flipping NFTs. The market has very little demand. When it has very little demand, it's extremely hard to find a buyer. When it's hard to find a buyer, you have to really move the prices down a lot to get people interested. So it's very volatile, extremely volatile. So if we get a break below 68, honestly, I would be looking at probably 41 ETH, 40 ETH for a retracement target in the Bored Ape Yacht Club. Let's take a look at their mutant counterparts. Mutant Ape Yacht Club sitting at about 14 ETH. And Mutant Ape is already printing the ETH pair as a new low. So we're sitting here at 14.5. Mutant Ape at 14, it's already broken the structure. So Mutant Ape, this shows you the staying power of blue chips compared to everything else. So if Mutant Apes are already breaking structure, everything that's less than a fucking Mutant Ape is just getting destroyed, like basically trading to zero. It's such an illiquid market out there. So yeah, Mutant Apes breaking structure. Let's take a look at the other deeds. The land right at 1.8 ETH. Not bad. Tempting. I kind of want to begin the early stages of developing the crypto jungle metaverse. And if we can build in other side, like if I can actually build a trading group and a school in other side, hey, they already got a jungle. Let's go to the crypto jungle. So I've been looking at other side for plots of land. But yeah, they're just in a consistent downtrend. They haven't found a floor yet, so we don't really have much structure to call for further downside. The trend is down. So the trend is down. It's going to continue to head to the downside. Goblin Town, pretty much called the top on this one. If you follow me on Twitter, I literally called the top on Goblin Town here, and it's in a downtrend. It's losing momentum. It's losing interest. Their advertising campaign has pretty much ceased, which was just a bot campaign anyways. And if we bounce, the whole narrative with Goblin Town is that it's a bear market NFT. If we bounce from here, they're fucking done. Completely done. Moonbirds, one of the projects of Proof Collective. Interesting alpha group. Consistent downtrend. Man, these things got up to like 40 ETH. 38.5 ETH. Now trading at 16 ETH. Have fun with NFTs, man. Have fun with NFTs. Azuki got up to about 30 ETH at the all-time high. Now down to below 10. Yeah, 31 ETH for an Azuki. Now down below 10. Not looking good for NFTs. Check out RSR. I can take a look at RSR. Yep. It's just the food kind of sucks. Hard to get decent Mexican or any Asian food. Interesting. Yeah. I was going for the Cuban food. The Cuban food was good. I really liked it. I went to Little Havana and got the Cuban sandwich, which is my favorite sandwich. And, you know, the world winner of the Cuban sandwich Like, I actually found a better Cuban sandwich in Bali. Don't tell anybody. Don't tell anybody. Milk and Madu in Bali, in Canggu, has a better Cuban sandwich than the world winner in Miami. Not a popular opinion. All right, let's take a look at RSR. It's really in shitcoin territory, RSR, you know, so it's going to be a laggard at best. We're looking at potential bounces. We don't have anything confirming any sort of bounce. We're just sitting on a very interesting level of support in a very oversold condition. So we'll preface the conversation with that. But RSR on the weekly, it's pretty much, it's below where it kind of hit the public market on Binance. It's below its low there, with a pretty nasty weekly candle here. Actually, you know, we've got a rejection from this level right here. So here's the low, the cycle low once it hit public markets on Binance. We broke below it. We rallied above. Huge rejection. Huge rejection. We're trapped below this level. If we can't get back on top of this level, we're going to stay below this level. So really looking quite shit for RSR. I think they're a stablecoin project. You know, a lot of the stablecoin projects, they're not going to come back. I'm not saying that RSR is not going to come back. I'm just saying it's in a very piss poor condition right now. That's not looking great. All right, I've got time for one more. Got to get out of here and head into the private group. If you guys are interested in joining the private group, we could be at a very interesting time here. And I'm still offering 25% off any package that you choose. So follow the links below to my link tree and get signed up in VIP. You'll get instant access to the server as soon as you pay. It's all automated. I don't need to manually bring you in or anything. And then, yeah, 25% off any package. If you choose the yearly package, you get 25% off the whole year. So go ahead and take a look at that. I will say that if you are interested in joining the group, yes, we do signals, but we are an educationally focused group. We focus on empowering you on learning how to read the charts yourself and taking your own trading decisions. Okay. We are not just feeding signals. I hate those types of groups because people get chopped to shit in those groups. They never actually learn. They never reflect upon their mistakes and correct their mistakes because they're being fed signals. So it's not my fault, even though I took the trade. It's your fault because you gave me a bad signal. We teach you how to read the charts. We teach you how to manage risk. We teach you how to interpret the price cycles and position alongside the probabilities. Okay. So if that's what you're interested in learning, links below. Yeah, RSR looks like shit. Let's see, what do we got? EWT. Thanks for the sub, Sonny. We eating steak and watching them bake omis. Gala, please. Yeah, I'm an omi as well. I love Olympus. Still love Olympus, which is just ridiculous. I mean, let's just look at Geom here. Like, guys, we're glutton for punishment. We are gluttons for punishment. Look at this. Horrendous. You could get a whole Geom for $2,000. Remember when it was 20? Remember when it was 20 grand? Holy fuck. Olympus is a fantastically interesting project that requires a ton of research, and it's probably just that the crypto market's not ready. If we head into a market where stable coins have a ton of regulation, Ohm is going to shine. Ohm is going to shine bright. Olympus is a fantastic, it's one of the most cleverly designed protocols I've encountered in crypto since I learned about fucking Bitcoin. As far as clever design, for me, there's Bitcoin, Ethereum, and Ohm. Now, it's hard for me to stand on my soapbox and preach the message of Ohm being a good investment when it's down over 92%, but I think that it's an ingenious protocol, and it will have its day in the sun again. But I was one of the people who died with Wonderland. Like all the Ohm forks died. And you can say Ohm died too. I just think that Ohm has a long-term vision and they haven't deviated from that. Okay, running out of time. How's Sol looking? We did take a look at Sol. It's very similar to the AVAX setup. Gala. Oh, okay, we got a little scammer here. Remove user. Peace out, Donald. Dumb fucking Telegram scammer. Guys, Telegram's shit. Like, just stay off Telegram and you'll be fine. You'll be fine if you just avoid Telegram entirely. Discord's not fantastic, but at least I think because Discord is not user friendly, by the way, free Discord links below. Because it's not user friendly, I feel like there's less scammers there. There's a lot of scams on Discord, but it's just way less than Telegram. Okay, we're going to go with Gala because we did take a look at Sol, and Gala's at least a higher market cap coin. So sorry, RK Cell, for not taking a look at TWT. You're in the Discord. Hit us up hit me up in the Discord. I think you're in the private as well. So just share a chart, share your thoughts, and I will share mine. New Hampshire, welcome. How's the weather? How's the weather down there? Take a look at Gala. Alpha Numerics not flashing a signal. We got more downside in Gala. Honestly, we do. I know that there's some fundamental news coming to Gala. It's not working. Whatever that fundamental news is, it's not working. We are trapped below a macro support level now. You know, this was kind of our very important level, basically the breakout candle, and we are below it. We've got a lot of work to do on Gala. Take a look at this. This is the 7-week moving average. As long as we are printing prices that are below the 7-weekly average, I don't expect this to make any gains. And this is kind of painting the picture. So, you know, when there's a large retracement, I'm sorry guys waiting in the classroom, I know I'm late. I will be there in a moment, but this is an important point. When you've been in a large retracement, the first coin to move is Bitcoin. The first coin to move is Bitcoin. The second coin to move is Ethereum. Okay, it's a rotation. It's a rotation after capitulation. You have the highest market cap coins moving first, which gives confidence to the top 10, which gives confidence to the top 20, which gives confidence to the rest of the market. It's this rotational, movement through the market where we transition from risk off back onto risk on. Okay, and when you're going from risk off to risk on, you start with the least amount of risk, which is Bitcoin, and then you move your way down the list. So Gala has a lot of work to do, a lot less than Solana, or sorry, a lot more than Solana, and Solana has more work than Avalanche, and Avalanche has more work than Ethereum, and Ethereum has more work than Bitcoin. We're getting close. Monitor this chart, add this to your watch list, BTC.D. As long as we keep falling here on Bitcoin dominance, that's a positive sign for altcoins, and we have bounce potential. If we rally past this high, it's all erased. Everything I just said is erased, and we're going back into risk off, and it's just more downside likely. So really leave this tab open, BTC.D. It's market cap of Bitcoin dominance. Leave it open, check it often, and that is all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe, and if there are any projects you think looking at, leave them in the comments section down below. Don't forget to check out the free Discord. Links below, and yeah, please trade safe. It is a jungle out there. Peace.